Hello VV Nation, my name is Brian and today we're going to look at how to pick better stocks. When looking for stocks to buy, investors commonly say they don't know what to look for because there's so much data the market gives them to look at. They spend more time than they want looking at the data and many times suffer analysis paralysis. Eventually, when they pick a stock, they're never fully confident they picked the right one. To understand the problem and the solution, let me tell you a quick story about pineapples. One day, I went to the grocery store with my wife. She asked me to go get a pineapple, so I went over to that big bin with all the pineapples in it, and I picked one that I thought was good. When I gave the pineapple to my wife, I was told I picked the wrong pineapple. I was like, what are you talking about? It looks good to me. It turns out there's certain things that separate good pineapples from bad pineapples. Apparently you need to squeeze it and sniff it and look at the coloring. I thought I bought a good one, but I didn't because I didn't have the right buying criteria. Without the right buying criteria, I would have left that store convinced I bought a good pineapple. In fact, if we brought that pineapple home and it didn't taste right, I would have blamed everything else except for my pineapple picking abilities. I'd say things like, it was out of season, or it got damaged in transit, or it was just a bad crop. Or, wow, I just got unlucky and picked a bad pineapple. I might have said the pineapple gods were against me. Or perhaps, if I just give it one more day, it'll taste better tomorrow. Does any of that sound familiar to your stock trading? If you're buying stocks without the right buying criteria, many times you'll end up holding on to bad trades too long because you'll continue to say, well, I can't be wrong. And the end result, you're going to end up saying things like, oh, it'll come back. I mean, after all, I picked a good stock. Instead, you need to have and use the right buying criteria. That's the pineapple principle. Let's look specifically at the buying criteria to use for your prudent position trades. These are trades that may last several weeks to months in your portfolio. First, we'll look at the criteria, then we'll look at some examples, and then we'll jump into the software and look at how we quickly find those stocks. Let me start off by giving you a little quiz. Here's 3 choices of stocks. I'm showing you a 1-year chart on all 3 of them right now. If you could pick one to buy today, which one would you pick? Okay, well, let's talk about it. Let's start by looking at number 1. Most investors have been trained to buy stocks that look like this. You might hear about it on TV, or you had an advisor tell you to do it. They say, hey, let's buy this stock that's been going down, and we'll ride it all the way back up. It's especially prevalent on stocks that had a nice run up in their stock price, but have started to sell off. They'll say, all right, it's at a discount now, let's get in and ride this thing back up. But the thing to understand is that stocks that are going down and in a downtrend, which is hitting lower highs and lower lows, those stocks that are going down typically continue to fall. That's why we avoid buying stocks like number 1. All right, well, let's move on to stock number 2. How about that one? With stock number 2, you can see a lot of volatility, right? If a stock is volatile in the past, it will most likely continue to be volatile moving forward. So you see this stock here, there's a lot of volatility. Now some people might say, oh, but it's moving up right now. And yes, it may continue to go up. But here's the thing. This stock may continue to rise over time. However, the stock's price in the future will continue having volatility most likely. And if you don't like that volatility, you should avoid stocks like this. Plus, when you have stocks that are going up and down like this, there's frequently areas of resistance like this that you need to watch out for. Due to all of this, we avoid stocks like number 2 as well. All right, well, that leaves us with number 3, right? So let's take a look at stock number 3. Here at VectorVest, we favor stock prices that look like number 3. We favor those because the price is steadily rising over time. One habit you can get into is just drawing a line or just visually picturing a line from the bottom left-hand corner of a graph to the upper right-hand corner. and looking for the stock price to hug that line as closely as possible. If you think about it this way, the stock is already doing what you want. It's rising, and it's doing that in a smooth and steady fashion. What you don't want is what we looked at a moment ago in stock number 2, a stock that goes from the bottom left to the upper right in wild fashion like this. You will not be able to sleep at night with those stocks in your portfolio. We want stocks that give you that sleep at night factor because it gives you more confidence that that stock is going to continue to go higher over time. Because what you see in the past is more likely what will happen in the future. In fact, to give you more confidence, expand the time frame. If it's smooth and steady for 1 year, and it's smooth and steady for 5 years, and it's smooth and steady for 10 years, doesn't that give you confidence that this stock has a high probability to continue to rise in the future? The first part of your prudent buying criteria is to make sure the stock price is steadily rising and not volatile. The next part is what helps ensure price continues to rise. Here on the graph, I've added EPS, which stands for earnings per share. VectorVest calculates a forecasted earnings per share, which makes it very easy for me and for you because you won't have to go to places like Yahoo Finance or dig around through a ton of earnings data. It's very simple. You just look for this one line to be steadily rising over time. When a company's earnings is rising, that company can grow. It can put more money back into research and development. And we've found that companies with rising earnings have stock prices that tend to go higher over time. I mean, wouldn't you rather invest in a company that's making money and making more and more money every year? You should always remember this. Earnings is the engine that drives stock prices higher over time. The second part of your prudent buying criteria is to make sure the company is making money and growing their earnings. In addition, you want to favor companies that are undervalued. Over time, we've found that a stock's price and its value meet. Most of the time, price will go to meet value. So you want to favor stock prices that are below the value. Now on this one, just recently you'll notice that price moved over the value after spending a long time underneath its value. Does that mean you should avoid it? Well, not necessarily. VectorVest has 2 fantastic fundamental indicators called RV and RS. They are on a 0 to 2 scale, with above 1 being favorable. RV stands for relative value and RS stands for relative safety. Notice that this stock has RV at 1.4 and RS at 1.41, which is excellent. That tells us that this is still a good stock and it's trading at a premium right now. If you had to choose between 2 stocks and everything else was exactly the same, and the only difference was that one was overvalued and the other one was undervalued, we'd say to choose the undervalued stock. So the third part of your prudent buying criteria is to favor undervalued stocks. Let's do a quick vision test to see if you're able to spot stocks that meet the buying criteria. I'm going to show you a few charts. I'll give you about 3 seconds for each one. I just want you to get practice identifying stocks just to see how easy it is for you to pick them. All right, let's do it. You'll notice I took off the ticker symbols and the dates. For now, I want you to focus on just price and earnings. And we're looking at 5-year charts. Here's example number 1. You have 3 seconds. 1, 2, 3. Yeah, this is a definite no. Price and earnings are both falling. So if you see something like this, you just move on. How about this one? 1, 2, 3. Yeah, this is also a no. Even though earnings looks great, right? Nice steady rise, it kind of flatlined a little bit, but it's rising over time. If you look up at price, this is like that example we talked about earlier where it's in downtrend. And since this is a 5-year chart, this right here is about 1.5 years of lower highs and lower lows. Those are the things that we want to avoid. How about this one? 1, 2, 3. Yeah, this is a yes. Hopefully you see how beautiful charts will immediately stand out to you. Look at that smooth, steady price pattern over time. Now, when you see things like this, you'll say, oh, well, that was when the entire market had to sell off and most stocks sold off there. So you would give good stocks a pass during that time as long as they resumed their uptrend. And look at earnings. Earnings is rising steadily. So that would be a yes. How about number 4? 1, 2, 3. Well, this one might be a little tricky for a lot of people because earnings looks great and overall price is in an uptrend and it looks like it's resuming its uptrend. Maybe you would put this one on a watch list for later due to an area of resistance up here. For now, let's just say this is a temporary no until it can resume its uptrend and break through resistance. How about number 5? 1, 2, 3. Yeah, this one would be a yes. It's not as pretty as one of the other ones, but it's still bottom left to upper right, minimal volatility with rising earnings. However, notice like right now on the right-hand side of the graph, it's falling over the last couple of weeks. You wouldn't buy it today. You'd want it to resume that uptrend. But this is a big difference between this one and the other one that had a year and a half of a downtrend. This one, you just want it to resume its uptrend. But overall, it's one that you would put in your shopping list. How about this one? Yeah, I probably don't even need to count to 3 because you'll see things like this and it should immediately stand out that this one is a lot better than even the one I showed you in example number 5. Great stocks should immediately stand out to you. And I'll just quickly flip through the rest where you can eyeball these and say, well, that would be a no because it's just going sideways right now. This one is a no because it's pulled back and it hasn't resumed its uptrend and earnings is falling. This one should immediately stand out as a no because you'll see things like this one and you'll wonder why you were even considering any of the other ones that didn't look as good. Before we move on and look at how to find these stocks quickly, let me ask you a question. Would you be more or less confident in the stocks that you pick using a system like this? Hopefully your answer is definitely more. A big part of being a successful investor is your confidence. And your confidence will come from a system that you believe in because you know it works. All right, the key question now is, how do you find stocks like that? Because you don't want to be spending hours of your life digging through data and digging through charts trying to find them. Let me show you how we do it here at VectorVest. To do that, let's hop into the VectorVest software. Within the VectorVest software, there are several places to find stocks that match the buying criteria. The first place you should check is the stock viewer. To get to the stock viewer, just access the viewers tab, and you can either click stock viewer here or click stock viewer right here. The stock viewer is where we take all the stocks that we track and we sort them so that the stocks with the best combination of value, safety, and timing will appear at the top of the list. We sort it by our master indicator, VST. This is a great place to start looking for your stocks. You can simply just start with the top 20, graph those stocks, and start off by looking at a 1-year graph and put earnings per share on the chart. So you'll have price and you'll have earnings. Now, if you did want to add value to the graph, just come up to add parameter, go to capital appreciation, and choose value. That way, if you did want to graph it, you could. I'm going to start with price and earnings, and let's just flip through them, and you will find several that you like. What I like to do is I'll have a piece of paper, and I'll just write down the ticker symbols. That way, I could add these stocks from the 1-year graph to a watch list. I'll just come in here and flip through and see, wow, the second one, hopefully that just really stood out to you. Bottom left to upper right. And remember, you can get in the habit of just trying to visualize an imaginary line from the bottom left to the upper right and trying to find stocks that match that as close as possible. And you'll see down here with earnings, it is also rising. So you've already found a candidate. And then you would just continue to go through and find ones that you like. This one had a nice rise, kind of went flat for a while, but it has now resumed its uptrend and earnings is great. So you might want to write that one down. This one, not quite, right? So move on. Because things like this will stand out. And that, I mean, there's several, as you go through, there's going to be several that really stand out to you. And then you'll put those stocks into a watch list and you can call it your shopping list of candidates. So you can see already just flipping through this top list, you found several that match the buying criteria, and how long did that take you? So simply start with the stock viewer, and you might only need to go to the stock viewer because you would have found plenty of candidates right there. So then once you've gone through the stock viewer and you found some candidates, you can do a 1-year chart, and you can just come down here and look at the 5-year chart and narrow down your list a little bit more. If you want to get more candidates, a couple of the other tools within VectorVest that you could use, if I close this graph, the second one was actually discussed last week by Todd Schaefer in his video about the Midas Touch. So I'm not going to go through that all again. I recommend you go watch that video because it was an excellent description of what the Midas Touch is and how to find those stocks. But I'll give you a tip right now. You just go over to the watch list viewer, open up the cherry picking folder, and here is the Midas Touch watch list. So start there. And watch that video from Todd. He will describe the different ways you could resort this list to find great candidates. The third way, let's head over to our Unisearch tab and we'll run one of our searches. Now, before I run one of the searches, I want to say this. You can see there's lots of folders here within VectorVest, and on the previous screen, there were lots of watch lists. Let me say this. No matter what you use within the software to find your stocks, whether it be the stock viewer, whether it be a watch list, or any one of these searches, you are still going to use the same buying criteria. You will pull up the graphs and see if they're smooth and steady prices with rising earnings and favor the ones that are undervalued. Let me point you to one of my favorite searches to find stocks that meet the buying criteria that we looked at today. Go to the Searches Prudent folder and open that up. And there's a lot of great searches in here, by the way. But if you scroll down the list, you'll come to one that says Safe and Sound. And when you click on it, you'll see that there's a description of that search right here. It says the easy way to find financially sound stocks for the long term. All stocks found must have favorable upside potential, which is that RV indicator that we looked at earlier. Above average safety, which is that RS indicator we looked at. In addition, their combination of value, safety, and timing must be favorable. The most persistently rising stocks, based on our proprietary formula for CI, which stands for Comfort Index, with the most predictable earnings, relative safety, will come to the top of the list. And you'll see all of that is built into this search, where you've got relative safety and relative value over 1, the VST rating above 1.25, and that is also very good on a scale of 0 to 2. One of the key things of this search, however, is the sort. It'll take the stocks with the best combination of relative safety and comfort index and bring them to the top. But the proof will be in the pudding, right? So let's run this search. And when we get our results, let's do the same thing we did before. Remember, no matter how you find your stocks, you're still going to go through the charts and see if they match the buying criteria. So I'm going to hit Graph All and maximize this. And let's start with that 1-year chart and just flip through them and see if this also helps you find stocks that meet the criteria. So here's one. Here's the next one. That looks good, right? And you just keep flipping through and you're going to see a lot of stocks that match the criteria. And remember, you can then put them into a watch list and look at the 1-year chart, go back to 5 years. And once you start going back this far, you might want to switch it to the log scale. And then you got 10 years, and you'll start to find some really good candidates to narrow down your list. All right, at this point, let me give you some action steps. Number 1, write down your buying criteria. Yes, actually write it down and make sure any stock that you buy meets all of your criteria. Today, we looked at a prudent buying criteria. If you happen to be a swing trader or an options trader, you're going to have your own buying criteria. Today, we looked at a prudent buying criteria, and I recommend that you write your criteria down. Number 2, if you haven't already done so, check out the Quick Start course available to you within the VectorVest software. It's located right on the training tab, and it's available to all VectorVest users. If you happen to be watching this video and you're not a member of VectorVest yet, take out a trial today. Number 3, if you want more detail and a step-by-step action plan, I highly recommend registering for our Successful Investor course. This course goes deep on all of the topics discussed in the Quick Start course and adds even more detailed guidance. We only open registration for this course a few times a year, so right now you can actually go to the training tab and scroll down and click here to register for it. There's a discounted price right now and a bunch of bonuses if you register before Tuesday. We do offer a 100% money back guarantee on the course. It includes 60 days of access to VectorVest if you don't already have it. So what you could do is simply type www.vectorvest.com/TSIC into your web browser, and you could register that way as well. We're currently celebrating Financial Independence Month here at VectorVest. This would be a great way to start you on a path to financial independence. We hope to see you in the course. Thank you for watching.